Hi friends, in this video, I am going to present to you my favorite mutual funds from three mutual fund categories. Number one is ELSS mutual fund category. Number two is small cap mutual fund category. And number three is Flexi-cap mutual fund category. So let's start with ELSS mutual fund category. So have a look at my screen and you will see that in the ELSS mutual fund category, I've selected 5 mutual funds on the basis of 3 years average annual returns. So at number 1 is Quant Tax Plan that has given close to 46% returns from a 3-year average rolling returns perspective. Number 2 is Bandhan Tax Advantage ELSS fund that has given 33% annual returns if I consider 3 years average rolling returns. And at number 3 place, there are 3 mutual funds: Bank of India Mid Cap Tax Fund, Parag Parikh Tax Saver Fund, as well as Bank of India Tax Advantage Fund. Now looking at this data, one might want to conclude that Quant Tax Plan is potentially the best mutual fund. But before we do that, let me also present you few more information that will help us make this decision. So what you see on my screen is Quant Tax Plan Direct Plan. And if we see in the last 1 year, if you look at the last 1 year returns, you will notice that Quant Tax Plan has been underperforming if I compare this with S&P BSE 500 TRI, its benchmark, as well as from an equity ELSS category perspective. If you see, blue line is Quant Tax Plan, green line is S&P BSE 500, and the orange or the brown line is equity ELSS. And if you see from the last 1 year, it has been underperforming it. Now you might say that, Rahul, it is fine because sometimes over a shorter period of time, mutual funds start to underperform and they will catch up eventually. So I agree to that argument in general, but also I want to present to you that, have a look at my screen and you will see that December 2021, Quant Tax Plan changed their benchmark from Nifty 50 TRI to Nifty 500 TRI. Now the point is that because they have changed their benchmark, is it likely to impact their returns in the coming months and years? Nobody can predict it, but something that we all must be aware of. Also, the second point is that, have a look at my screen and you will see that Quant Tax Plan has been investing in high risk stocks. For example, you see in their current holdings, there are 5 stocks that have got the red flags as per ticker tape. So from that perspective, Quant Tax Plan is a mutual fund that generally takes higher risk if I see these 5 red flag stocks. My point is simple: like any mutual fund scheme that has performed well in the past, there is no guarantee that it will continue to perform better in the future, which is the similar case with Quant Tax Plan. There is no guarantee that it will continue to perform better when it comes to ELSS category. So we must review our mutual fund portfolio periodically to see whether there are any fundamental changes in the mutual fund approach or its benchmark or their fund manager, etc. You can right away review the health of your mutual fund portfolio using Deserve Wealth Monitor at zero cost. This app has been built by experts that have previously managed funds to the tune of 50,000 crore plus and have been in the industry for 20 plus years. I'm not at all saying that we need to hop from one mutual fund to another mutual fund every single quarter or month, but we must take into account overall macro environment as well as market movement. And to drive this point home, let me come back to Bank of India Mid Cap Tax Fund, and what you will see that in the last 3 years, this fund has managed to give impressive 29% annual returns. But do you know that this fund right now holds 63% of their holdings in mid-cap stocks? And as all of us may know that mid-cap stocks have been in bull run in the last 1 year. Have a look at my screen. They used to be at 8,200 levels from an index perspective, and which is now at close to 12,000 levels. And this is one of the reasons Bank of India Mid-Cap Tax Fund has been performing really good in the last few quarters. However, in my simple view, this fund may not perform in the coming quarters and years because mid-cap stocks are likely to see some correction at some point in time. No one can predict at what time they will start correcting or by what percentage they will correct. But the point is, mid-cap stock have been in the bull run for quite some time now, and there is likely to be some correction. And at that point in time, Bank of India Mid-Cap Tax Fund may not give us the results that it has been giving in the last few quarters. So all of us must actively monitor our mutual fund portfolio, and this is where Deserve could be a great help for you, as Deserve offers you suggestions to invest in mutual fund schemes. Secondly, if your mutual fund portfolio is drastically underperforming or required nuanced inputs, you can book a free call with Deserve experts and discuss your portfolio in details. You can click on the help button and book a free call using the WhatsApp messaging. This will give you personalized view like whether you should hold a particular mutual fund or whether you should exit a mutual fund or whether you should invest in a different mutual fund based on your risk appetite. So if you want to have an expert view and want to fix your mutual fund portfolio, you can use Deserve Wealth Monitor. You will find the link in the description. Coming back to ELSS category, if you look at the Bank of India Tax Advantage Fund, you will see that the expense ratio of this is 1.24, which is extremely high from my point of view. So I'm not going to consider that mutual fund. And that leaves us with two mutual funds. One is Bandhan Tax Advantage and second is the Parag Parikh Tax Saver Advantage. Bandhan Tax Advantage is a really good mutual fund, but my only issue with this mutual fund is that this also has two stocks with red flag, and I think they are taking slightly higher risk. While in case of Parag Parikh Tax Saver Fund, you see that there are no red flags when it comes to their holdings or the stocks, which is what I like. Also, if we compare these mutual funds in the basis of risk ratios, you will see that from a standard deviation perspective, Parag Parikh has the lowest standard deviation, 10.44, which means that this fund is less volatile. Also, from a Sharpe ratio perspective, from a Sortino ratio perspective, it has better ratios as compared to other two mutual funds. Also, lastly, from beta perspective as well, Parag Parikh Tax Saver Fund is only 0.57 as compared to 0.97 and 0.91. Beta simply means that if Nifty, let us say, falls by 1%, by what percentage it is likely that this mutual fund will fall by. And if you see, Parag Parikh is 0.57% as compared to Bandhan Tax Advantage and Quant Tax Advantage, which is at 0.97 and 0.91 respectively. From that perspective, Parag Parikh seems to be a better stable fund, and that is why this is my favorite mutual fund when it comes to ELSS mutual fund category. The second category is the small cap mutual fund category, and for this, let's have a look at my screen and you will see that. So if I look at the 3 years rolling return period, and you will see that Quant Small Cap has been the best performer, which is the light blue line here, followed by Nippon India Small Cap, which is the dark blue line, as a second mutual fund. And at number 3, you will see is the brown line, which is HDFC Small Cap Direct Growth Fund, that has been at number 3. However, when it comes to small cap mutual fund category, my personal view is that we should not only go for just one mutual fund. We must consider having multiple small cap mutual funds in our portfolio, because in small cap mutual fund category, the universe of the stock is very high. So we have 250 stocks to be selected by the mutual fund manager, and small cap mutual funds are extremely volatile. So we need to also balance the risk. And talking about risk, have a look at my screen. You will see that Quant, HDFC, Nippon, Axis and SBI. If I compare these 5 mutual funds on beta as a parameter for risk, you will see that Quant, HDFC and Nippon has very high beta as compared to Axis and SBI small cap mutual fund. And therefore my view is that we need to select one out of Quant, HDFC and Nippon and one out of Axis and SBI, because that will give us stability in one hand and growth at the second hand. But the question is, how do we decide which one out of Quant, HDFC, Nippon and which one from Axis and SBI small cap fund? For this, my parameter is asset under management. Whichever has got the lower asset under management, I will go with that. So here, for example, have a look at this Quant, HDFC and Nippon. If we compare these 3 funds, we will see that from net assets perspective, Quant has the lowest net assets, which is 8,000 crores, and between Axis and SBI, it is Axis mutual fund that has got less AUM, which is 15,000 crores. Now let me explain to you with an example that why I am saying that the lesser AUM is better in case of small cap mutual fund category. If you look at Quant small cap fund, it is 8,000 crore roughly, and if you look at Nippon, it is 36,000 crore. Let us say that tomorrow a new small cap stock comes in the market which is looking very, very promising, and both the mutual fund manager, Quant small cap mutual fund manager and Nippon mutual fund manager, want to invest 5% of their portfolio in this particular promising stock. So 5% of 8,000 crore is going to be close to 400 crores, while 5% of 36,000 is going to be 1,800 crores. Now Quant has relatively higher chances of acquiring 400 crore worth rupees of stock versus Nippon that has to buy 1,800 crores worth rupees of this stock because of the less liquidity of the small cap stocks in general on the exchange. So in a way, higher AUM has made it difficult for Nippon mutual fund to go and buy these promising stocks because of the less liquidity in the exchange. And I hope this point is very, very clear to you that why I am stressing upon that less AUM is better in cases of small cap mutual funds. And if you like this point, I would request you now to hit the like button as well, so that this video reaches out to more and more people. And you can also consider subscribing to my YouTube member community, because I share in-depth analysis on mutual funds and stocks that might help you. Last point on Quant small cap fund is that if you go to ticker tape, you will see that they have close to 19 stocks that are red flagged, But in cases of small cap mutual funds, please understand the risk is extremely high because we are talking about small cap stocks here. And anyways, the risk in small cap stocks is extremely high. So from that perspective, I know there are 19 stocks that have been flagged as red in case of quant small cap mutual fund. But my personal view is that the combination of quant small cap mutual fund plus Axis small cap mutual fund gives us a better balanced portfolio when it comes to small cap mutual funds. This is not a recommendation. Please do your own research. I am doing my analysis and I am sharing my opinion here only. Let's move to category number 3, which is Flexi-cap mutual funds, and have a look at my screen. And what you will see, based on the 3 years average annual rolling returns, you will see Quant is number 1, followed by PGIM at number 2, number 3 HDFC Flexi-cap mutual funds, number 4 is Parag Parikh Flexi-cap mutual fund, and lastly number 5 Franklin India Flexi-cap mutual funds. However, please note that SEBI only introduced the Flexi-cap mutual fund category in November 2020. So this category has not even completed 3 years so far at the time of shooting this video, and majority of these mutual funds were into a different mutual fund category prior to November 2020. In fact, between November 2020 and October 2021, many of these mutual funds moved from any other categories to Flexi Cap mutual fund category. For example, have a look at my screen and you will see that Quant mutual fund, they changed their category from Quant consumption fund to Quant Flexi Cap mutual fund only in January 2022. So the Quant Flexi-cap mutual funds have not even completed 3 years, while the data we just saw is only basis on the last 3 years average rolling returns. Because of which I do not believe that we should be looking at last 3 years average annual rolling returns. For this, we only need to consider last 2 years average rolling returns to truly see the impact of these mutual funds in the Flexi Cap mutual fund category. So for this very reason, what I've done is I've only selected last 2 years average rolling returns, and you will see that from that perspective, HDFC Flexi Cap mutual fund is at number 1, giving us 19.90% return annually. Number 2 is Quant as well as Franklin neck to neck really. And at number 3 is Parag Parikh Flexi Cap mutual fund, giving 10.13% annual returns. Now, if we compare their risk ratios, you will see that Quant, PGIM and HDFC have higher beta. Quant has 0.94, PGIM has 0.92, HDFC has 1.04, as well as Franklin has 0.97 beta. So from a risk perspective, these 4 mutual funds are at higher risk. While if you look at Parag Parikh, it has only 0.64 beta. Again, this is more stable from a risk perspective. Also, if I show you Parag Parikh Flexi Cap mutual funds portfolio, you will see that if I come down here, you will see that Google is there in their portfolio, Microsoft is there in their portfolio, Amazon is there in their portfolio. So Parag Parikh also takes some positions in the US stocks. So all in all, from aggressive investors perspective, HDFC Flexi Cap mutual fund will make more sense, while for conservative investors and investors who want to have some exposure for US stocks from a diversification purpose, then Parag Parikh will make more sense. Please do not take any mutual funds that I have described in this video as recommendation or investment advice. This is simply my opinion, my view. Please make sure you do your own research. So in this video, we covered ELSS mutual fund category, small cap mutual fund category, as well as Flexi Cap mutual fund category. If you would like me to analyze any other mutual fund category, let me know in the comments the name of the mutual fund category you would like me to analyze, and I'll be happy to shoot a part 2 of this video. Also, you can consider subscribing to my YouTube member community because I post exclusive in-depth analysis on various assets such as mutual funds, stocks, etc. With this, I will see you in my next video. Until then, keep rocking.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.
The views and opinions expressed are personal views and opinions of the speaker and does not reflect the opinion of Deserve or its affiliates.